well, I think we can keep starting for now. But we are very excited to be co-hosting this session with one of our portfolio startups, NayaOne, and dive into the crucial topic of risk resilience in insurance, specifically within the life and health and property and casualty sectors. So really quick, for those of you who haven't had the chance to connect with me before, my name is Paula. I am part of the Insurtech corporate partnerships team here over at Plug and Play in Silicon Valley. Also joining me is my fantastic colleague, Sergio, who's also part of our partnerships team, Brenda, who's our program manager, and then our fantastic Pierrick and Francesco, who's are our ventures experts. They are the ones in charge of identifying and connecting our insurance corporate partners with the most cutting edge technologies that will deliver ROI. So definitely amazing people to be connected with. Now, in the next few minutes, we will be covering some key areas. We will first touch upon the biggest trends shaping risk resilience in insurance sector. Following that, the NayaOne team will introduce their innovative sandbox environment. And then you will have the opportunity to see firsthand the power of 4 cutting-edge startups from our ecosystem that are joining us today to focus on the P&C value chain and then to other ones on the life and health side. And then we will wrap up with next steps and leave some time for your questions. So please feel free to drop them in the chat throughout this session. Now, very quickly as an overview for those who may be less familiar with Plug and Play and what we do, you can think of us as a global innovation engine. So we have created a dynamic ecosystem that connects forward-thinking corporations like yours with a network of over 95,000 startups across more than 25 different industries. And we also bring together VCs, investors, governments, universities, and so much more. And so with the main goal of making innovation open to everyone, everywhere, and also bringing impactful technology to market faster. Now, to give you an idea of the size of this ecosystem that we've built from our Silicon Valley headquarters, where it all started, we have expanded our global footprint to over 60 offices worldwide. And our team of 200 dedicated ventures experts like Francesco and Pierrick are constantly scouting the globe, allowing us to provide our more than 580 corporations with unparalleled access to new market, emerging technologies, and evolving customer segments. And we also realized a while back that hopping on a plane to Silicon Valley isn't always feasible for everyone. So we've been on a mission to bring Silicon Valley's opportunities closer to our partners. And we've been launching new offices in strategic locations based on what our regional partners need. So only this year, so for the past 4 months, we've already launched new offices in Seattle, in San Jose, in Sugar Land, Indiana, Albania, Taiwan, and many more to come. Now, within financial services, we are very proud to work with over 130 institutions who rely on our expertise to be able to connect the dots for them. Because when you can aggregate all the data points from all these insurance corporations, that's when you can really start seeing trends in the market. And that's sort of what we use as a better way to highlight what's coming around the corner. Another thing that we are very excited about is the launch of our first financial services fund focused on Insurtech, enterprise and AI, and fintech. It was closed last December with $50 million, and most of our LPs being insurance corporations. So for those of you who would like to know more about this, we are already planning our second fund to be launched next year. So happy to talk if you want to ping me after this session. Now, at the end of the day, our core mission is to make innovation accessible, scalable, and results-driven for everyone. And we are committed to ensuring that our startup connections translate into tangible ROI for corporate partners. And to illustrate this, I wanted to share a powerful quote that David Ness at US Bank said when they won our 10-year partnership award with Plug and Play, that for every dollar we spend at Plug and Play, that returns $100 in revenue to the bank. And maybe last, a more detailed example of how our impact translates for insurance corporations is our long-standing partnership with Irish Life. They've been partnering with us since 2018, and since then they have engaged in 21 pilots, and they have achieved an impressive 33% conversion rate to full implementation. Their participation in both our Silicon Valley hubs and Munich hubs ensures that they stay ahead of innovation trends, not only in the US, but also in EMEA. Now, here's the broader Insurtech Silicon Valley team that makes this all possible, with experience working with leading insurance innovation for more than 10 years. And now I'll hand it over to our ventures experts, Francesco and Pierrick, who will dive deeper into the context of risk resilience value chain. So guys, the floor is yours.
Thank you very much, Paula. So before moving forward and going through the startups' demos and presentations, we wanted to provide a brief overview of what are the different core focus areas when it comes to the overall risk management lifecycle, starting with P&C lines. So the startups that we'll pitch today focus on property-related insurance lines, but the important idea here is that we can apply this core framework and lifecycle to almost every kind of P&C line, including, workers' compensation, general liability, commercial auto, and many more. Let's start with the first core aspect, which is data. As you know, having access to accurate, high-quality data is the foundation for an insurance carrier to be able to analyze risk, and also accurately price, select, and even mitigate it. In the realm of property-related lines of business, relevant data could be, satellite imagery, IoT or sensor data, and more. Then the second part, which is risk analytics and modeling. Here, essentially, carriers have to accurately analyze risk and gather insights and information that will be then essential for risk pricing. Here, one key highlight is, the emergence of technologies such as AI or machine learning that enable carriers to do different interesting things. Number one being helping those carriers with predictive analytics. Then number two, AI and machine learning driven tools now enable carriers to seamlessly integrate multimodal data into risk analytics. So think about how satellite imagery or sensor data could be integrated into risk analytics. And then number three, for those carriers that are already using generative AI for risk assessment and underwriting, these generative AI power tools now enable carriers to access risk insights in a more efficient manner through natural language queries or interfaces. Then we have risk pricing, underwriting, and distribution. Here, insurance carriers tend to have their own proprietary capabilities. Think of underwriting rule books and guidelines, pricing algorithms, distribution networks, etc. And then last but not least, we have the loss control and risk mitigation part. This is an increasingly important focus area. Here at Plug and Play, we have discussed this specific topic with a relevant share of our insurance corporate partners. So we definitely see a trend from carriers increasingly investing resources in overall risk prevention. Here, the core idea is to access the information and the resources to actually prevent risk from materializing, with relevant impacts on overall loss ratios, claims, and profitability, especially in the realm of those lines where some of the main challenges related to implementing these kind of programs were anything ranging from the financial feasibility of the program to the actual scalability of the program. And with that, I'll pass it over to Pierrick for the life and health part.
Thanks, Francesco. So for the life and health side of things, let me start with like a simple idea. Basically, what if we could see health risk before it becomes a claim? So that's the mindset behind this value chain. We didn't just bring together a bunch of tools, but we built a new way of thinking about life and health risk, from risk prediction in pre-symptoms and post-symptoms prevention to disease management to ultimately enabling the recovery of the patient. So first, the pre-symptoms prevention. This is where it all begins. So before a person even feels different, we are using AI, wearables, lifestyle data to catch early warning signs. So Aktivo Labs and Spike will present and share the solution today. They are showing how early risk detection is already working in practice. Next, we have the post-symptoms prevention. Once symptoms shows up, speed becomes everything. So Ciba Health, for example, that we invested in, focus on identifying the root causes of metabolic and chronic condition early, before they escalate. It's still prevention, but just further downstream. Then comes care planning. So care planning is where many people drop off, missed appointments, poor follow-ups, non-adherence. For example, we've invested in Anonymous Health, so they are delivering a digital-first care of addiction recovery. It's also very important for chronic condition, especially outcomes, because the outcomes depends on not just the treatment, but also on consistency. Finally, we have the post-treatment support. So support matters. Even after the medical treatment is over, for example, Percy Health, they help people navigate life after cancer, supporting mental health, fatigue, and return to work. This kind of follow-up care help prevent relapses, reduce long-term costs, and also support the long-lasting well-being. So why does this kind of value share matter for insurance? Because it flips the model from reacting to risk to staying ahead of it. And when we do that, everyone wins, Healthier people, fewer claims, and longer-term value for insurance. Now, I will let you over to NayaOne, who will show how their sandbox platform make it easy for insurance.
Fantastic. Thank you. And you'll see that Scott has unfortunately been unable to join today. So you have myself, Ollie Platt from NayaOne, and Amrit. For NayaOne, I head up our client solutions. So really working with our clients at a strategic level, helping them define proof of concepts, and then implement them, and then ultimately deliver those third-party vendors. Let me quickly share my screen then, just to kind of walk through kind of what we're doing. Fantastic. So at NayaOne, I think the core thing that we're trying to enable large financial organizations to do is to run proof of concepts kind of at pace. And I don't think it will come as a shock to anyone here that I think it's a really, really common problem in large financial enterprises, particularly in the insurance sector, that it's really easy to become kind of stuck when trying to adopt and deliver new technology into the financial the organization. So what we're set out to do is to actually kind of multiply the number of vendors that these large organizations are seeing by 10, and to kind of accelerate the number of vendors they're kind of being able to test, and reduce those timelines down by a factor of 10 as well. And ultimately, by doing that, right, the goal being, if we've seen more vendors, if we're able to assess them faster, we're actually able to find the better partners for us at a much quicker rate, and ultimately kind of select the ones who maybe we're not going to spend 3 years implementing down the line. Now, where does this kind of end up going? Well, the common question I kind of get asked, right, it's, well, that's great, but the real thing I'm trying to run a proof of concept on is, how does this work for my company, for my data, for my use cases? Because that's fundamentally what I'm trying to understand. And in this pain that you're kind of possibly hearing, you're absolutely not alone, right? I think it's being part of a large financial organization and delivering this tech is kind of some of the most exciting stuff that large organizations do a lot of the time. But kind of finding that right partner, choosing that right partner, vetting that right partner, that really, really takes some time. And critically, what you're ultimately not really in a position to be able to do is to make a well-informed decision based on how well a demo goes or how well a sales pitch goes, because that's not going to really enable you to select that technology with any vigor and to move on with some kind of confidence. And that is kind of where the proof of concepts come in. But then as soon as you say, look, well, we want to get hands-on with technology, that's where it gets really, really tough, right? And we spent a lot of time with some of our large financial organization clients. And this is kind of before we start working with them, the kind of the background, the backdrop to kind of where they started working, that to run an internal proof of concept, it might take 3 to 6 months of internal approvals before they even get started. And there were a whole matter of kind of roadblocks that kind of sit in the way. And a lot of these roadblocks have really, really good value if we are talking about going to production. But often getting kind of approval across all of these different boards just to know if a vendor is a great fit or not going to be a great fit is a huge time investment from the insurer, from the Insurtechs, from the vendors up front. And that kind of cost and time is what we're kind of trying to optimize for and allow these rapid decisions to be decided. So through NayaOne, what we do is we basically allow you to bring in as many vendors as you might like to solve a proof of concept, bring them into the NayaOne, you evaluate them in a couple of weeks, and then you can ultimately bring in the one vendor that is a great fit for you. And how we then do that is kind of accomplished by having this, what we would call an air-gapped environment. So there are three parts to that. The first being that we have hundreds of pre-vetted companies that we worked with, and the 4 companies you're going to see today, as we'll come back to at the end, are 4 of those companies. But you've then also got the need to have data that looks and feels like the real data that you have, and also you want to make sure that you've got kind of secure environments where this testing is going to be able to occur, all of which sit outside of the insurance organization, so you can bring these vendors in quickly, so you can invite a vendor, test them with that relevant data, which critically is not your real data, and get those answers that you're so looking for. And finally, before I pass it on, I was just going to say, across the space, there is a whole multitude of areas, right, that I think our clients are looking at. When we're even talking about the claim section, there's just a vast multitude of areas.
Awesome. Thank you, Ollie. That was awesome. And with this, I wanted to kick it off with the P&C value chain with 2 amazing startups that we have here. So I would like to give the floor to 7 Analytics, Hayder. They are building a new solution to analyze flood risk. So happy to learn more about it.
Hello, everyone. Can you see the screen and slides okay?
Yes, we do.
Perfect. So yeah. Hello, and thank you for the opportunity to present today. My name is Hayder Engebret, and I'm the Chief Business Development Officer of 7 Analytics. 7 Analytics is essentially a flood risk specialist. We deliver high-resolution property-level flood risk data to both insurers, banks, and asset operators, also public institutions like municipalities. We launched our insurance data offering commercially last spring after about 3 years of R&D in collaboration with Fremtind, being the largest residential property insurer in our regional home market, Norway. And already we have signed commercial partnerships with multiple carriers in Norway, representing more than 30% of the total property premiums in the country. And we are in basically a lot of pilots at the moment with carriers, MGAs, and broker groups across the US, Nordics, broader Europe, and also Australia. And like I mentioned in the setting, that the US market is a key priority for us going forward, having set up our US headquarters in Boston last year with our CEO, Helge Jørgensen, heading that up. Recently, we also got AIG, the largest carrier group in Australia and New Zealand, on board as both an investor and partner, which has been a great validation for us. We look forward to delving in and working with them going forward operationally as well. On the macro backdrop, it's worth noting that the growing flood losses we've seen in recent years, and the whole audience is probably familiar with, are heavily driven by increasing urbanization, essentially paving over the previously permeable ground. While covering all flood types, 7 Analytics has specialized on urban or pluvial flood modeling, being where the biggest data gaps remain, as we hear in most industry dialogue. So how do we do this? We combined our enhanced land use and elevation mapping at 3 feet resolution level, as far as we know, the most granular available, and which we continuously update to capture changes, with over 600 physical parameters identified that impacts the flood risk. Importantly, we have then trained our model with machine learning techniques on a large number of real flood claims provided by our partners, to identify and weight which of those parameters impact the risk at any given building. And that can change dramatically from one area and one building to the next. The end result, as you can see here, is that we produce a building level risk score based on both separate frequency and cost probability models. And we can also provide the underlying parameter data, which our existing partners use for insurance pricing and also portfolio risk management. So instead of relying on historical event frequency-based approaches, we capture what we say the actual risk per property from the building footprint, which is increasingly important in a world with both changing and intensifying rainfall. And just to illustrate there, our hazard map output. On the left-hand side, you can see FEMA flood zone mapping, while on the right-hand side, our predictions in the same area. As you can see from where we really differ on the top and bottom sides, you need to dig deep to capture the individualized risk in a given area. We often see dramatic shifts just from one side of a street to the other, based on, for example, relative elevation. And again, just to note this, because we always start from the building's footprint, our model is equally good at assessing the flood risk of, say, a multi-building commercial site, as you can see in the illustration. And we deliver our data today to both commercial and residential insurance. Coming back to Fremtind, our original collaborator, they have now implemented our data in their pricing engine from this year, and repriced their entire property book. And as you can see on the right-hand graph, for high-risk properties, on the very right side, they have more than doubled their pricing after implementing our data. But as they say as well, the shift was overall a zero-sum game for them, where they were also able to lower their pricing for around 40% of their policyholders. Finally, and importantly, we also integrate weather intel into our models, meaning we have the capability of forecasting site-specific flood depth, extent, and timing several days ahead. This has application both as an early warning tool, enabling loss preventive actions for asset operators, and has application in insurance, for example, as a trigger validation solution in parametric, where we see a lot of interest at the moment. Also, it is an alternative and complementary way to the satellite-based solutions of doing NatCat event analysis for claims management or reinsurance contracts. This was live and in use by TotalEnergies, hospitals, and retailers in Texas during last year's hurricane season. And we then got live fire validation that it is quite precise. To illustrate, Hurricane Beryl was not supposed to hit Houston, but shifted direction quite dramatically 30 hours before landfall. We picked that up within the hour and started alerting our clients. In the lower right, you can see our prediction colored in green, and on the left, you can see a monitoring image of the actual event. Our model was accurate on timing and within half a feet of water level on the off-ramp that you can see, which we're obviously quite happy with. And our clients was as well. I will also briefly mention at the end that the way we typically engage with new potential partners is to run a free data test to validate the claims we're making, where we typically run a subsection of a policy portfolio through our model, blind, just based on locations provided, and let the counterparty compare against claims history and internal risk assessments. And here, sandbox solutions like NayaOne could be great in aiding that overall process. Please reach out if it's of interest to learn more about this and potentially run such a test with us. And with that, I say thank you and open for questions.
Yes, thank you, Heather. And please feel free to use the chat to ask any questions that you would like to ask 7Analytics. And meanwhile, we wait for some questions to come up. Poll will pop up on your screens for you to vote if you would be interested in meeting with Heather and the 7Analytics team in the following weeks or days. So please make sure to vote. And then after this session, we will make sure to connect you with all the startups that you would like to further meet. And meanwhile we wait, Heather, I did have a question for you. Like, how often do you update your model input on the geospatial side?
Good question. And to start with answering that, I can mention that when you see this sort of 5-year, 10-year, 20-year forward projections using climate predictions and the loss estimates, what those forecasts typically ignore or can't essentially model efficiently is the changes in the urban landscape, both growth in cities and changes within the cities, which is that's not just us saying that is proven or shown by a lot of other researchers as well. Really is a very big driver of both flood and wildfire losses. So With our machine learning model approach, what we're also then quite good at is capturing the ongoing changes in the environment. We essentially run algorithms all the time to capture with the various data sources that's available through the various data sources to capture those changes. And we also, which has been quite a big part of those 3 years of R&D, use our internal reprocessing and enhancement capabilities using satellite imagery as well to complement what is available on the various sort of raw data input side.
Okay, interesting. Thank you. And if we have no other questions, I think we would move forward with the next startup that's going to be presenting on the PNC side. I would like to welcome to present the CEO of ProSentry. So feel free to share your screen. Yeah.
There we go. Can everyone see my screen? Great. Thank you, Paula. Thank you, Haider. My name is Nadav Schnall. I am the co-founder and CEO of ProSentry, and today I'm here to talk to you about smart monitoring for buildings. So we have a little term we like to coin, which is called risk mitigation as a service. And basically what we do, what ProSentry does, is we provide an all-in-one cost-effective smart monitoring solution that provides real-time instant notification for a variety of critical building issues. So anything from water leaks to gas leaks to oil leaks to mechanical malfunctions to environmental issues. We provide all of that under one platform. Today, I'm going to choose one of those areas, which is water leaks, to dive into, do a little bit of a deeper dive on that. So generally, water leaks, and specifically non-weather related water leaks, are usually the top 3 causes for insurance claims. So we see that across the country. It varies. Maybe the wildfires in Los Angeles have changed that a little bit on the West Coast, but generally we find water to be the #1 cause, or definitely the top 3. And so the way we approach this issue is we approach buildings and try to figure out why buildings are hesitant to adopt smart technologies. And so we focused on 3 different areas. One is buildings just rely on insurance carriers to cover insurance loss. So if we have insurance, why not let them pay for it? And there's also very hard to find a clear ROI, since water leaks, for example, are not something that you can necessarily predict. And the second thing is high costs and infrastructure concerns. So in other words, buildings are saying it's just too expensive to have this, or is it difficult to retrofit into an existing building? How do we get about that? And then the last thing is buildings are just hesitant to invest in technology that they don't know. There's new technologies that come out all the time. How do we know that the solution that is going to be provided is something that's going to go with them for the long term? And so the way we went to address these are basically in 3 different areas as well. So first of all, we've started to establish relationships with different insurers. Chubb Insurance, for example, in the United States, recognizes us as a vetted partner of theirs, and we're working with several others. And so by doing that, that already gives us the validity and the ROI that many buildings are looking for as far as insurance. And that can come in the form of reduced premiums, or that can just come in the form of a reduced risk profile for your building. The next thing is we provide multiple technologies on one single platform. So we don't provide just one solution. We provide many different solutions, and we also are very, very easy to retrofit into existing buildings. The last thing is we've been able to lower our costs substantially and make it extremely easy and user-friendly to deploy. All of our systems, the buildings have the ability to deploy the systems themselves, so it's very, very approachable. I'm going to show you a quick timeline of how something like that would look inside a building. So within about a second of a water leak touching any of our sensors, it sends a notification into our platform. Within about 30 seconds of that notification being sent, we are already notifying our clients, and there's a variety of ways that we can do that. Text messages, live operator calls, APIs, in-app notifications, etc. And with about 2 minutes, that allows for targeted action. Targeted action can mean actual physical presence on the property, so someone can actually come and address the issue, or it could also mean kind of automated technology that can help stop a water leak, for example, an automatic water shutoff valve. I'm going to show you, this is my business partner, John Rusk, and co-founder. I'm going to show you a little bit about how that works and how easy it is for a sensor to react. So what John's doing right now is he's causing a leak to happen under a sink. What you're going to see is the water is starting to go down and is going to touch a sensor that is placed on the bottom. That sensor sends a notification to a gateway, which goes right up to the cloud, back to the gateway, and causes the water to stop by causing the water to stop at the faucet. And then notifications are sent literally within seconds of that going on. So very, very efficient and quick way for this to happen. Just show a little bit about the other capabilities we have. So we have everything from water to gas to boiler temperature, mechanicals, air quality, etc. So when you really offer this wide range of sensing capabilities within a building, it becomes a very, very interesting and beneficial offer to the building. I have two quick use cases which I'd like to review. First one is a hotel and casino, over 1,000 rooms in Atlantic City. They had major losses due to frozen pipes, compounded with risk from wind and flood. We heard 7 Analytics talking about that. And there was just limited insurers that were willing to take on that type of exposure. What we did is we provided them with a system that has temperature sensors, it has water leak sensors, automatic water shutoff valves, and oil detection sensors. So all of that together basically opened up the market for additional insurers to come and bid on the building. In practice, we saved the building nearly $5 million in insurance costs over 5 years simply by lowering the risk profile for the building. And since installing the system, we've detected 56 verified leaks. So these are leaks that we've then verified with the building, which would have caused much bigger impact on the building. I don't know what each of those would have cost, but the average water claim in the United States from freeze and water is about nearly $14,000. So the math is there. Another use case that I have is a residential building on the east side in New York City. Classic apartment building, multifamily. They had leaks that were being caused by HVAC units due to condensate train clogs in the summer months. So when the cooling is on, all the systems are working and the water backs up. Sometimes it backs up and causes bigger damage. Sometimes it's just a slow leak that's very hard to identify. We installed water sensors in all 750 of the units. They monitor for water, they monitor for temperature, and they monitor for humidity. So that is particularly important also in the winter because once a tenant may leave a window open, temperatures can go low, frozen pipes. So it's not only a matter of catching the leaks before they happen, it's actually also making sure that the temperatures are monitored. And so in that building, just last year, we were able to catch 94 verified leaks. Again, we don't know what the insurance claim would have been for each one of those, but the average cost of an insurance claim in New York City for a large urban multifamily unit is about $89,000. So even if we take just a handful of those, which would have been a much bigger leak, the ROI is certainly there. So in 2024, ProSentry timely reported about 3,610 leaks. We verified this with our client. None of these have resulted in insurance losses. And so the success is already there. Paula, questions?
We love this. And thank you so much, Nadav. So we've got a few minutes again, in case the audience has any questions. And again, a poll will be displayed in your screens. So make sure to vote if you would like us to connect you with Nadav and the rest of the ProSentry team. And meanwhile, I did have a question. So for buildings that have had past insurance claims, how quickly can ProSentry impact the risk profile and support renewed coverage?
Excellent question. Thanks, Paula. So almost immediately. So buildings with prior claims or maybe even buildings with that present a non-renewal risk particularly benefit from this because they have, our offering is very easy to retrofit in buildings. We can do literally the entire system can be deployed under a couple of weeks, which makes the building more attractive to insurer and almost immediately lowers the risk profile. So that's actually one of our biggest drivers in bigger cities. So we have buildings that approach us and say, listen, we're being dropped by a carrier. No one wants to insure us anymore. We install the system and all of a sudden the market opens up again. And they have that ability.
Awesome. And I see we do have a question in the chat asking about your target market, if it's mainly large buildings or single family homes, if you can tell.
Yeah, thank you for that. We target multifamily and commercial properties. So the benefit of our system really comes because in a single family home, you may control what's going on inside the apartment, but within multifamily and commercial and hotels, leaks can come from above. So even if you're not the owner of the specific space, you still may be affected by it. So the way our system works is a full entire building system. And so we're going for full properties.
Awesome. Okay, so if there are no more questions from the audience, I think we could move on to the life and health startups, starting with Spike API, which is a digital platform that gathers data from wearables and IoT devices. So I would like to,
Cool. Hi, everyone. I'm Vitas, or Vijay from Spike, Chief Growth Officer. And happy to be here today. And Spike is a B2B data technology company headquartered in the United States. We also have an engineering office and presence in Europe. We work primarily with digital health field, with insurance field, as well as healthcare field. So for example, one of our larger customers is Seguro Sura, one of larger insurance businesses in Latin America. And moving on to what we do and our value proposition. So our core product is what we call Spike Health 360-degree API. As some of you might know, the health data field is very fragmented. Health data is scattered across sources such as wearables, medical IoT devices, laboratory tests, and it's really difficult for insurance companies and other enterprise businesses to get access to this data. So that's where we come in at Spike. We have a technology to extract data from sources such as more than 300 different wearable devices, medical IoT devices, such as, for example, glucose monitoring or blood pressure devices. We also have a solution to extract data from laboratory tests, for example, such as blood tests. And on top of that, we also have solutions, AI-driven solutions to, for example, extract nutritional data from food images or even data from actual phone conversations that are driven by AI technology. And our value proposition is basically that we can not only extract this data, but standardize, normalize it, and provide it to straight to you, straight to your application, be it a web application or mobile application. So to give some more specific examples, here are some of the data categories and devices that we support. So as I mentioned at the beginning, we support pretty much all the top wearable devices currently available in the market, be it Fitbit, Garmin, Apple Health Connect, Google Health Connect ecosystems, or even more niche devices such as Whoop or Oura Sleep rings. We do have access and partnerships with these devices to extract data. On top of that, we support medical grade devices such as Dexcom, Freestyle Abbott, Withings, Omron, and many others. And on top of that, we have integrations with other digital apps and ecosystems that can be source of the health or wellness data as well. On top of that, as I mentioned in the beginning, we are investing in the nutrition space. So for that, we leverage artificial intelligence and computer vision technology. And at this point, it's possible to also extract data from meal images. And once again, use this data to quickly build habits within your user base and audience to make sure that people eat healthy. And then, of course, through that, reduce insurance and claim risks. So for example, here's just a quick demo of how this product is integrated into one of our customers, which is Oraculus, one of Cristiano Ronaldo's startups. And we also have some insurance businesses who use this product to help build healthier habits within their audience. And of course, through these healthier habits, it's possible to ensure that these people have lower risks to request claims and have various health issues. So as you can see in this demo, it uses computer vision technologies to recognize the meal and provide the nutrient data. So of course, this is much faster than people doing it manually. And it's kind of a gamified experience that helps to form these habits. So kind of to summarize this, when it comes to the insurance sector, we see health data and nutritional data beneficial in sort of three main pillars. So of course, one of those pillars is prevention and early detection of diseases. So basically, it is possible to use wearable data or medical IoT data to monitor metrics, for example, such as heart rate variability, blood pressure, glucose concentration in blood, and then, of course, through that, encourage healthy lifestyle habits, and of course, use this data to manage the risk profile and provide insurance solutions accurately and for the price that is, of course, acceptable for the insurance provider. The second big pillar is, of course, wellness programs. We see that many insurance players are investing into additional wellness and health programs through mobile apps or through web platforms. So, of course, this way you can increase the engagement throughout your audience and user base and make sure that they are less likely to stay and renew their insurance plans. And of course, the third big category is that health data is a powerful tool for risk assessment and underwriting. So by understanding your customers better, you can leverage that to understand what kind of insurance plan might be the right for them, what pricing is the right for them, and perhaps which customers you are able to provide insurance service to, or which ones might have to be, let's say, rejected or considered differently. So yeah, from that side, that's pretty much sums it up. I would be happy to take and answer any questions you might have, but we already work with quite a few insurance companies. We have some cases where we see that wearable data helps to improve chronic conditions, helps to improve user engagement, such as with Seguro Sura. So we'd be happy to explore other pilot projects with other enterprise businesses. So thanks a lot.
Awesome. And thank you for that. Again, feel free to put questions in the chat or raise your hand if you'd like to just speak directly. That's also possible. And again, we will run the poll. So please make sure to vote if you'd like to be connected with the amazing team at Spike. And meanwhile, people vote and so on. I have another question. So as the wearable tech market evolves, how do you guys plan to scale your services and stay ahead of all the emerging trends in the health and data analytics?
So that's basically the core of our value proposition. We constantly monitor the new releases of new wearable devices, the sensor upgrades, and we are constantly expanding our ecosystem and the platform with new devices and new sources. So we've been in this business for almost 3 years. So yeah, we're not stopping here. And as I mentioned in the beginning, on top of wearable devices, which we have at this point, probably we cover around 90% of the wearables market. We will be adding additional sources such as lab tests and, as I mentioned, nutritional data and so on. So that's pretty much day-to-day of our business and something we monitor and keep upgrading every single day at Spike.
Awesome. That's very exciting. So if there are no more questions, and I see Gaurav is already sharing his screen, I will welcome the last startup that's going to be pitching today. It was Aktivo Labs. So I'll hand it over the floor to you, Gaurav, to explain the people in more detail what you guys do and how you work with insurance companies.
Yeah, thank you, Paula. I hope you guys can hear me.
Yes,
quick check.
we can hear you.
Fantastic. So yeah, I'm not doing slides today, but I just wanted to quickly show a live demo of how Aktivo manifests in the wild. So hi everyone, I'm Gaurav, the CEO and co-founder of Aktivo Labs. We are a digital health sciences company, started the journey in Singapore 7 years back, but right now we're a fairly global presence, including in the United States, where we are headquartered in New York. I'm dialing in from Singapore today. Don't feel bad for me. I'm still running on US time, so it should be fine itself. But what I'm showing you on the screen is one of the manifestations of the Aktivo platform, which is the Aktivo application. It is available on both the app stores, but access to this application means that someone is paying for it. It's either your employer, your insurer, your government, or you're running a pilot with Aktivo Labs itself. The core proposition is taking or leveraging the power of real-time data that you can generate from any IoT-enabled sources, your wearables, understand that data, harmonize that data, and that turn that into something meaningful. And that's where we started this journey 7 years back to understand the meaning of the data. I don't have a score generated yet today. I'm already into 8th of May, but I'm going to show my score for yesterday. Why a score? Very early on in our journey, we figured out that the best way to talk to a population about risk which is multifactorial in nature, is to do this through a composite scoring mechanism. So the Aktivo score is on a scale of 1 to 99. It's simple to understand. Higher the score, better is your physical lifestyle and sleep, and better is your overall health risk. My score yesterday was based on the data on the day before. So it's based on how much of exercise I did, how much of light activity. This is minutes spent on your feet. So for example, if you were having this chat right now, standing up with the phones in our pocket, it would have registered as a light active minute. Sedentary minute, this is minutes spent, sitting down, what we're doing right now, awake. I had 5.5 hours of sleep and 5,000 steps. Not an ideal day, but this data can be picked up from any and all sources. So whether it's your Apple Watch, a Garmin, a Fitbit, a Whoop, an Oura Ring, is bring your own device. But more importantly, what we tell is explaining the score, telling the consumer that the score is great, good, or needs improvement, and then how the score was generated. We tell them that their day can only be broken down into these 4 different categories. You're either exercising, you're on your feet, you're sitting down, or you're sleeping. And based on how you get the right balance tomorrow morning to generate a score, to get the messaging right to a population, we tell everyone to get a score of 80 and above. And we also tell them that the best way to get that score of 80 is getting the World Health Organization's guideline of what an ideal day really looks like. But more importantly, from a consumer's perspective, this is one of the advantages that we have. Say if I come back to this application after 1 month, after 2 months, I interact with all these different insights. As you can see, I can spin my Aktivo score on the screen, and I can see there are peaks and troughs. There's a particular day at 26, my score, although I got 13 minutes of exercise, I want to see exactly what caused that. And I remember this day that I was on a long-haul flight from LA to Singapore that actually brought down my score. So it goes on to show it's not just only about taking those 10,000 steps, but getting that right balance really does matter. And around the score, we have created multiple different journeys. What I'm going to do right now is going to show you an example of an Aktivo score manifested with an insurance partner. So this is Old Mutual in Africa. We did a very exciting POC with them last year, which translated into a 14-market 10-year contract. This is an Aktivo application, white labeled. All these different features that you see on your platform these are all journeys of Aktivo white label. But again, going back to the Aktivo score over here in Africa is manifested as the Old Mutual Thrive score. Yesterday, again, the same score of 67. But what they have done is that they've tied the score and the various things and journeys I take on the platform to a game. It is inspired by your Air Miles program. It's just like you keep on accumulating points by leading a good lifestyle. So today, just opening the application, I got 10 points. And so far, I've kept on accumulating points and gone up to a silver membership. And I can see that what all are the privileges that I have because of that silver membership itself. And as and when I go up, what are all the points itself? These are all merchant funded points, and this can be fairly configured. Something as simple as doing a meditation on this application can give you a point, which you accrue. You create some digital assets on this platform, and you stay on the platform itself. So all the way from starting to understand the user's data, what kind of risk, nudging them more closely, and then taking through a very deeply profiled journey. But beyond this, we are very excited that we're looking forward to a launch of our partnership with MasterCard and Old Mutual. With MasterCard, we have a global partnership itself. What you're seeing on the screen right now is my Apple Wallet. You can see all my credit cards. What you're seeing on the screen right now will be the first Aktivo score-enabled credit card, which we're launching in Africa. So the same users, the same policyholders who have the Thrive application and also has that Old Mutual branded credit card powered by the Aktivo score, they would be able to get their score, see that on their Apple Wallet or Google Pay. And if your score goes up, say by 7 points, $7 can be deposited on this card itself and can be redeemed from any participating outlets. But what the platform also allows is that for you to embed various insurance products and make it dynamic as it sees. So this is just like a starting point of what we have done. We have gone into deeper journeys in terms of understanding the risk engine from behind, such that we can just look into the data and the proxy that can actually also further give us different risk analytics of our population itself. I'm going to stop right there. But like we said, that we have partnerships with not only Old Mutual, but some of the largest insurance companies in the world right now, from AXA to Daiichi. MetLife, we recently partnered up thanks to Plug and Play, who has taken us to them as a corporate partner. But we have also have partnerships that we have announced in the recent past, even with reinsurance companies like Genry, where they're using the Aktivo data as a vital part of their underwriting process, and they're taking us to the market, to the existing cedents that they have. We are right now present across 14 markets. The platform's available in 9 languages. And yeah, we're looking for partners to engage and to see how we can solve a very wicked problem of extending health spans of population as opposed to just lifespans. Stop right there. We'll take any questions. And again, thank you for this opportunity.
Thank you so much. That was very good. And so while we wait for people to ask questions in the chat, and again, we'll be running another poll, so make sure to vote as well, and we will make sure to connect you with Gaurav and their team at Aktivo Labs. I did have a question for you. So more particularly on ROI. So your platform features health gamification and personalized nudges. So can you quantify the specific ROI that insurers realize from implementing Aktivo compared to other traditional wellness programs?
Yeah, different partners quantify at a different stage of their journeys. For example, I'll not take their names, but one partner, I can take their names because we are actually publishing these white papers. So Daiichi in Vietnam, where it's the first Daiichi implementation that happened, we're already gone live with them in Vietnam and also in India. One of the main use cases were in terms of how to increase their persistency with their existing partners. We have clearly established that people who generate the Daiichi Connect score versus people who do not, they're 6x more likely to renew their premiums next year, just from an engagement perspective. To someone like an Old Mutual who's looking at to move from 1.3 products per customer to 5 products per customer, we've done that extensively on a population of 50,000. That is a very clear pathway to that outcome. To someone like an AXA, who's not just like only using it to create health-linked insurance product, which is called WiseGuard Pro in Hong Kong, which we will start, where an end user or policyholder ends up earning 20% premium discounts for 250 great days of Aktivo score. They're also using it for population health management. The platform clearly shows that, like, out of 100,000 policyholders generating the data, 6,000 at a super high risk of being diabetic. They focus on those 6,000, put them on a significant program such that they see that there is a clear outcome on managing the claims down the road itself. The ROI has clearly also been vindicated by some of the contract extension. Old Mutual signed us up for 10 years, AXA for 5 years, Daiichi for 3 years, after we ran the program for 1 year, MetLife for 4 years. So these are all long-term contracts, and it's been on the back of 1 year when we ran a very proof of value, demonstrate the outcomes itself.
Yeah, I agree with that. Well, thank you so much for showing this demo and the video and everything. And there are no more questions in the chat. I would like to thank all the startups that participating in this session. And now I wanted to hand it over to Ollie from NayaOne, because all these startups have been onboarded into the digital sandbox environment of NayaOne. So I'll let Ollie explain you how that would work in case you would like to test any of these solutions on a live sandbox environment. So Ollie, feel free to loop it back.
Thank you. Yeah, so exactly as we mentioned there, and almost as if on purpose for this this call. If I just jump back to where we were at the very start, within the NayaOne sandbox, obviously one part of it is you've got this ability to bring vendors yourself or select some of the vendors who are already in that marketplace to enable you to run these proof of concepts, to see how these solutions might work, to bring in the senior stakeholders and see how this might exist. And for each of these the vendors that we've heard from today, if I jump back in here, we've got our example platform, and in here we can actually see that straight away you could actually be accessing 7 Analytics, Aktivo, ProSentry, and Spike, and these are all kind of part of that, right? So as part of the platform, you could actually run proof of concepts with these, basically getting started in weeks rather than having to work through the onboarding and the processes that are going to prevent you from making that quick decision as to, is this going to drive the value? Can we get the buy-in? Can we see why we're going to do this at speed?
Awesome. So if anyone is interested in playing around NayaOne's platform, also please make sure to ping us and let us know, and we will connect you to their team so that you can test any of these solutions also on live. And just as closing remarks here and finish the session, I hope you can see my screen here real quick. But yeah, I hope you enjoyed the session. And please, if you would like to talk with any of our team at Plug and Play, you can just scan this QR code and book a meeting with any of us if you're interested in learning what other technologies might be relevant for your specific risk resilience focus areas. We've got, as I mentioned, more than 95,000 startups in our ecosystem, so we're more than happy to talk with any of you that joined today. And we're also hosting our flagship event in June. It's our Silicon Valley Summit happening at our HQ in Sunnyvale from the 10th to the 12th of June. So we still have time to plan. So if any one of you is interested in attending, we will have many of these startups that presented today. They are in person as well as many others. So happy to talk about registration and how you can participate as well. So thank you so much for all your time and for everyone who joined, and hope to connect soon.